we don't have to worry about the markets going up and down if I know that the companies I'm invested in have that balance sheet strength, are engaging in productive activity to generate returns, because they are going to make it through that cycle. Don't always be the person that's always leading against the crowd. Crowd is also right a lot of times.
Good morning. Welcome to Decision Points. My name's Doug Hudson.
I'm Scott Wood.
And if you're listening or watching online, welcome to Decision Points. And let's welcome our guest, Dhruv. Welcome to Decision Points.
Say my name again.
Dhruv
Well done.
Maniktala.
Fantastic.
You just told me a minute ago, maybe better than your wife after 20 years.
25 almost, yes.
How long you been married?
28 years.
I know that.
You know that.
So I had the honor to, I don't know if you know this, marry Scott and Alicia 3 months after Carrie and I got married. So we've known each other a long time.
He officiated the wedding. Did you know that?
I did not know that.
Yeah.
And you're still married.
And we're still married.
Clearly,
No
Dhruv,
thanks to him.
Yeah, Dhruv, you know me well.
Yes.
Thanks to the state of Texas, they are still married, and a lot of hard work by Scott and Alicia. So to our friends watching, let me give you a little introduction to Dhruv. Dhruv is, and this is the shortest introduction we could come up with for you. You've not been bored in your journey, and that's what we're going to get into today. Dhruv, you're the Chief Investment Officer at True North Advisors and Western Alternative Strategies. You have over 2 decades of experience in the investment industry, both in public and private markets. You've worked in acquisitions of power and water infrastructure assets across the globe. What does that mean?
I don't know, just sounded good.
No, you literally are buying.
So essentially, we were doing acquisitions of greenfield and brownfield power plants. So think of LNG terminals before they became fashionable now. So in Trinidad, building LNG terminals or acquiring the entire infrastructure assets of Jamaica, the island of Jamaica, being on Senate floors, votes at 3 a.m. It was fun.
It's incredible. You've served as a global institutional consultant advising on $3 trillion in assets, served as a VP and equity analyst at Wachovia, and as the principal of a multifamily office. Here at True North, you lead our investment committee and the initiatives of our investment team. Welcome.
Thank you.
All right, let's get started a little bit on your background. Where are you from? Tell us a little bit about your family.
So I'm from a small state in India, which has basically, 4% of the population of the world.
A small state.
Small state.
Compare that to the population of Texas.
Maybe. I always lose count because it is supposedly a small city with 4 million people maybe.
Wow. Yeah.
So anyway, grew up in India, went to a school that was a British school in a colonial French fort.
Yeah.
If that makes sense.
Yeah.
So
Did you, as a kid, did you feel like, could you tell it was a fort?
yeah, there were cannons out there.
Seriously?
Yeah.
What was your elementary school like? Was it similar?
We didn't have any cannons.
No, nor did I. Okay.
No, we had 5 cannons. They're still out there, I think. So
But
So was this like what we would call kindergarten through 12th grade?
yeah,
Okay. So
Yes.
all the way through same school.
same school.
Yep.
Yeah.
Yeah,
And so many lasting friendships. Many people from our school are here in Dallas.
I bet.
Yeah.
How many languages can you speak?
Probably 0.
Well, I think,
I probably speak 2, maybe
Yeah.
3.
Yeah.
Yeah.
Yeah. What would be the third?
So Punjabi is my mother tongue, father tongue.
Okay.
From that side, it's more of a dialect of Hindi. So
Okay.
if my dad would hear this, he would say, no, you don't.
I think all of our dads would probably
Yeah,
say,
probably.
That's the mark of a good dad. Son, you could do it better.
Yes.
Right? Yeah.
Yes.
All right. What's the third one?
So Hindi, which is the
Okay,
national
yeah,
language.
all right,
and yeah.
Okay. All right.
And obviously the language you're speaking in right now, Doug, it's called English.
Well, that's debatable as well for some of us.
So brothers and sisters.
I have one younger brother, so a year younger than me.
Okay.
He's kind of involved in my family had a business growing up, so he still manages that.
What kind of business?
Yeah, what kind of business?
So it was building sort of the buses, if you get the chassis, but you build custom, just the coaches all around it.
No
So
way.
I had that for years. And I think that part of the business is wound down and it's going to transition a little bit more to real estate.
Yeah.
So that's what they're doing. It seems
In India?
In India. I just never really wanted to, I guess, the anti-dad syndrome, maybe.
Yeah.
I wanted to kind of do my own thing. And so just went on a different path.
So
Yeah.
that entrepreneurial journey of your father never looked interesting to you at the time?
No.
No. Yeah.
No. I think it speaks to the limited options that you had in India at that point in time. So when you're going through school or college, either you'd become an engineer or a doctor.
Mhm.
I mean,
Yeah.
that was the thing.
Those are the
Otherwise,
paths. Yep.
basically life is over because India didn't have opportunities at that point in
Yeah.
time. And so I tossed a coin basically to pick biology or math, and it landed on math. So I went that way. It was as mundane as that.
Yeah.
Did your dad start the business, or was it a generational
No,
business?
he started the business he started the business in, I'd say 1960, 1965.
Mm-hmm.
My family was actually part immigrant that came through, if you know the history of India, in 1947, it was partitioned off by the British. And most Hindus moved to India and most Muslims moved to Pakistan.
Huh.
And so it was a bloody sort of transition.
Yeah.
My dad and their family, they actually came from Pakistan, Lahore, and then moved to the city. I think my mom's family was already in India, New Delhi.
Okay. What'd your dad think when you did not go the doctor or lawyer route?
It wasn't even an issue. I mean, they always asked us to do what we wanted
Yep.
to do. So
Yep. All right. So you're going through this education. What's a core memory as a child? What are some of those things that you would say helped shape who you are today?
well, my second day of kindergarten, and kindergarten in India is pre-K here. So it's really the first time you ever go to school. So second day I go and there was someone who was supposed to be sitting next to me, my friend, except that we had free seating. So someone else sat in that seat. I told him not to sit there and pushed him and he fell down. And the teacher started walking towards me and I was wondering, I wonder where she's going, till I realized she was actually coming to me. And then I got caned, like literally the British canes. And so that was my memory about not stepping out of line.
The first day of school.
Don't
right.
handle conflict with violence.
Yes, exactly.
Yes. We've all probably been there. I have to ask, where was the cane utilized? Hand, backside?
Always the backside.
Always the backside. Ow.
Yeah.
Yep. We
Yeah.
had scheduled caning sometimes when we were
Like
older.
the entire class?
No, not the entire class. I mean, we weren't that violent. But, you know, if we did something wrong, then they're going to cane you next day in front of the school or something like that. And then people will pad up before that. So
Yeah. I think, you think about this. I know yours and our age, and you just said, I think about, schools. Can you imagine today if our third grader came home and said they were spanked or paddled? I mean,
I have vivid memories of the principal pulling out the wooden paddle out of the bottom drawer of his credenza. And
100 Principal Haynes at the high school. I still remember, which I did not have the privilege to be received that, but I
Yeah.
know about it. And I'm not saying one's better or worse. I'm not, but I can't even imagine it. But that's a core memory.
yeah, it became sort of funny over the years.
Yep.
Yeah.
Yep. Exactly.
did the canings continue all the way through 12th grade, or do they taper off at some point?
No, they tapered. I was usually a pretty well-behaved kid, to be honest. Even then, I just didn't know what I was doing wrong.
Well, exactly. Yeah.
So, yeah.
And you touched the hot stove at second grade, and you realized you weren't going to do that again.
Well, I don't think it even really mattered that much.
Right, yeah.
But yeah,
Yeah,
I remember that though, because it was funny because it was so disconnected. She's walking somewhere and I don't know where she's going to,
Yeah.
oh, it's me.
Yep. All right. So where you finished 12th grade there, which you've already addressed, probably means 12th grade in your school was like a sophomore in college, maybe?
No. I think it's relatively similar in terms of high schools.
Okay.
I think it really starts to separate itself in college. Some colleges.
In junior high school, 6th through 12th grade, sports, hobbies, music, what were the things outside of studies that you were into?
I really wasn't very studious. In fact, I was a terrible, terrible student.
Really?
Yeah. I think I remember in my 11th grade, they did a math test and I think I got like 2 out of 100. on that. And so by the time I finished the 12th grade, it was 100 out of 100.
Yeah,
But there's
yeah,
a different story
yeah.
there. But no, I wasn't a great student. It was mostly more music. I mean,
Yeah.
in India, some opportunities that you get here, at least back then, weren't available
Okay.
in terms of just going out and easily going, integrating yourself into sports, etc. We would always play, but not in a formal way like you do here. So
What instruments were you playing?
I had a guitar.
Yeah.
Yeah. And
You
so I had
still
a
play today?
terribly, but yes. My son is learning guitar, so he's getting better than I am.
All right. You
He's
took me
only-
right
he's only
where I
8 years
wanted to
old.
go.
Yeah.
Tell us about your wife and how many kids y'all have. And-
Yeah. So my wife is from a really large town in North Dakota, which,
With
as you would
500
assume,
people?
is with 500 people, which is smaller than the small town in India.
Uh-huh.
So she's from Bismarck, North Dakota, about 60,000 people. I don't tell her enough, but she's just immensely patient and kind. So we met in early 2000s,
What's her first name?
Karen, with an I.
Where did you guys meet?
We met in Atlanta. So I was there through my career doing the power and water.
Okay.
And so she was there at Emory in a research group there because her brother, who's an anesthesiologist, was working there. So we connected, we met there. And then she moved with me to Seattle, Washington, then to the DC area where we got married, and then here to Texas.
Tell us about your kids. What stage are you in? What's going on with at the house with the kiddos?
The stage of pain. 2 kids, they're twins, so they're 8 years old.
All right.
1 boy, 1 girl. They are pretty incredible.
Yeah.
And so, but I'd say any dad would probably say that about their kids. So nothing revealing. So I don't know what else to say except that I love them very much. And yeah.
What are they showing interest in?
My daughter is very focused, so she's doing violin, piano, but she's also kind of brilliant at math.
Yeah.
She's doing things that you would expect them to do in 4th or 5th grade.
She probably
And the
won't
third-
get a 2 out of 100 on her math test.
No, she won't. She's very dedicated, and my son is exactly the opposite.
Yeah.
He would not. I mean, he really does well at school, but nothing that more than he needs to.
Yep.
And he'll get distracted pretty easily.
Yep.
So he plays the guitar. He can do everything really well, but he doesn't try.
Yeah. And isn't that kind of crazy? Sometimes he'll have this great talent, but focus could be,
Yeah.
and he's good enough at so many things. He could struggle to figure out which one he's gonna land on.
Yeah.
Where it sounds like your daughter, she'll know I'm gonna go take path A, and I'm gonna go excel at that.
Yeah, and path A, B, and C, and excel in all of those.
Yeah, exactly. Yep. You write any songs? You write any music?
Oh no,
No. All right.
no.
But he and Mark do long road trips to Ada, Oklahoma, and it's a one play there. It's like a playlist competition between the two of
That's
them.
right.
With all their old music.
Well, old music, thanks God.
Well, I mean, it's
younger
from
than
our-
both of us, so-
yeah. It's all relative.
I will say most people I like are either about to die or they're dead. So
All right. So a couple things
So
there. One,
older music.
Older music.
We buried the lead. First of all, why are you and Mark, by the way, is Gelbach, our co-founder of True North, why are y'all driving to Ada, Oklahoma?
because we like the drive.
You just go there and touch base and then come back?
Well, we have a institutional relationship there.
Okay.
A great, obviously I can't take names, but a great group of people that are trying to do a really good job with the hospital system. And so we manage our assets for them. And so we go periodically in and go meet them.
Very cool. Give me a favorite artist right now that you're listening to or love. Just
I can't decide between Bruce Springsteen and Bob Dylan.
two good ones.
So
They're in your top 5?
They're older guys.
They are older guys.
They're not in my top 5.
They're not even in my top 5.
Yeah.
I like them both, but they're not in my top 5. All right, so you finished high school.
yes.
One of the things that you and I don't have in common is you got accepted to ITT, which I understand is the hardest university, maybe, if not in the world to get into, harder than Harvard. I got into one of the easiest schools ever to get into. Why'd you choose ITT? What's that process look like? What are your takeaways from your experience there?
Yeah, that just tells me that you're smarter than I am.
Street
Taking
smart,
that-
baby. Street smart.
Well, it's IIT, the Indian Institute of Technology. It's basically Hunger Games for going to college in some sense.
Interesting. Yeah.
So
How big is the university? How many students?
There were 5 campuses when I was there in 5 different cities.
Okay.
So think of it, the University of California system, right? Berkeley.
Different systems.
Yeah, different.
Yeah.
So, but this is sort of a national thing, and you have a test that you have to take to get in, and that's the only qualifier. It's probably sophomore, junior level, and you're doing chemistry and math and things that were never taught to you in school. And so some kids start preparing for from 7th grade, try to get through. And so in India, you're either a doctor or a lawyer, at least at that point in time. And so that was my path. And so why not? That was just the next step. I think I could be wrong because numbers keep changing, but I think there were 100,000 people that apply, and then they pick, at least at that time, they pick like 2,000. So 2%.
And so it gets
Baylor similar?
Yeah, similar, yeah.
Yeah.
And so they get that reputation of most difficult because of the acceptance rate.
That percentage
application
rate,
versus acceptance rate. Is that
Well,
a
that's
fair way to characterize it?
But I think when you get in, you think that, okay, I'm there, which is the feeling I had.
Yeah.
But when you get there, it's probably even harder.
Yeah.
And so the smartest kids in school that have got 100 and everything, they go in and they start getting 2 out of 100s there.
Yeah.
And so
when you started, you'd flipped the coin, you decided the coin landed and said math, and so you're down the math path. And then is that pretty much the 4 years you were there? It was all math-based education?
Yeah, it was all pretty hardcore engineering. And so you almost even ranked in terms of what you could do. So of the people that got accepted, you actually ranked. So of the 2,000 people, you get a ranking. And so based upon your ranking, you get a choice of what you could do.
And that's all public?
That's all public.
That's all public?
Yeah.
So literally 1 to 2,000?
1 to 2,000. Yeah.
Wow.
Yeah. So,
and did they rank you all the way through the 4 years?
No. I think after that,
they kind of seed you.
Yeah.
At freshman year, and then you go.
Yeah, you basically have to pick your department and your major there, and that's based on your ranking.
And so, what did you choose on day one as your major and your department?
There's almost a pecking order and what goes where. So I was about 454, and so I picked mechanical because that's what was there. Maybe I should have picked chemical.
Yeah.
But yeah.
God. I was going to ask you where you ranked, and I mean that's another core memory. If they post 1 through 2,000, you're gonna remember that the rest of your life. Oh,
yeah. It was, I think, because so much hard work goes into it, and I can't even think about the kids that have worked so hard and then didn't get in.
Yeah, exactly.
But yeah, I think for people that get in, I think any and everyone will then remember that number.
And so in school there, because I want to get to another one of your favorite institutions, University of Georgia.
Yeah.
But is it singularly academics?
Yes.
That's it.
That's it. I mean, there's some sports, but frankly,
you're not going there for that.
No, because unlike schools here, you still had school there on Saturday, at least half a day. And if you don't go through your day, which was 8 to 5, and almost most days was 8 to 5, if you did not keep up with it, you were probably going to fail.
Yeah. So
at what point through the 4 years did you start thinking about coming to the U.S.?
Yeah.
I took a couple of math classes as a minor. Business classes as a minor. So I realized I didn't really want to be on a factory floor. And I think the design opportunities in India, and this kind of just tells you how limited information was in picking a career then. I didn't really even know. There was no real support. My folks, as great as they weren't really exposed to that world.
Yeah.
So I realized that design opportunities weren't really available in India in, late 90s. So I decided, okay, I think this is what I want to do from a business standpoint. And there was only so much I could do in India with that degree, and the experience here wouldn't be that valuable. So I applied to business school here in the US at that point in time. I wasn't exclusively focused in the US. I looked at Australia and Canada as well. But I think the biggest thing was if I could get a scholarship or not.
And then did you go directly from undergrad to graduate school, or was there a break in between?
There wasn't a break, and that was also hard because typically you require 5 years of experience to get into a business school, grad school. So yeah, those were some limitations I had.
Yeah, I got to believe too, though, obviously coming from ITT and that as you apply to grad schools in the U.S., I mean, they know where you're coming from, so your pedigree is pretty well, received.
Yeah, I think more now than then.
Yeah.
I think just age of information now, things are pretty transparent. I don't know if it was that well known there.
Okay.
But I was fortunate. I got few scholarships, few partial scholarships, but UGA, University of Georgia, gave me a full scholarship.
Yep.
So that's why I just picked them. I had no idea about the school except that it was ranked like 25th for business schools at that point in time.
Yeah.
On that list.
Yep. Where are you all ranked for football?
I don't know. I think it's somewhere between 0 and 1.
Take us through. So you go to grad school at Georgia, and then do you move into the workforce?
Yeah. So as great a curriculum at UGA was, it seemed almost, it was just extremely easy compared to what I was used to.
Yep.
So I was also, because I was on a scholarship assistantship, so I was working sort of the maximum I could. But yeah, I did that for a period of time. Then one of my professors, so here I am, like an Indian guy, needs visa sponsorship, has no experience, wants to get in and join the workforce in a finance degree, which my university, as great as it was, wasn't really great, at least in terms of finance placements in the area. And so one of my professors recommended me. He was on the board of a company, recommended me. I interviewed and kind of got the M&A position.
In Atlanta?
In Atlanta.
I guess. Yeah. That was one of the questions I was going to ask you, and I don't know if you want to answer. How many students at Georgia could have survived ITT? I mean,
we had, I believe, 2 or 3 people from there in the university.
Yeah.
So I think a bunch of people could. I think you just need the discipline, and which I didn't have.
Yeah.
So
those first 8 to 10 years of your career, and as our listeners, they're business owners, they want to start a business, they want to think about growing their business, building their business with the end in mind. Those first 10 years, one of the things that struck me about your life and journey, a friend of mine said, when you're like kind of 22 to 32, and it's almost contrarian to some people, he's like, get as much experience as possible so you can see different cultures, you can see how different businesses operate, just get a breadth of experience. Seems like you did that. What are some of your key takeaways from those first 8 to 10 years of full professional career? What would you tell your kids when they're 16, 18, 22 years old? What are those 1 or 2 or 3 takeaways of those 10 years?
I don't know if I can answer that exactly that way because I'm trying to survive the next day with my kids. 16 is far away.
Okay, tell my kids.
Yeah.
My kids are all in their 20s, and you got them sitting right here. What are some of the things you learned in those early years of your career?
It was really interesting, Doug, because if you think about the early 2000s, we had a big energy trading boom in the country, and then we had 9/11 and the recession. And so the industry I was in, which was energy and power and water, it kind of went through an upcycle, almost like the tech bubble. And then with Enron, et cetera, came down. And so I was on both sides of that. That puts some memories in you in seeing some really stupid decisions being made, both, I think, inside the firm where I was at and different places. And they were probably well thought out, but just seemed pretty obvious to me in hindsight that why would we do anything like that? So I think a key learning is that I think if you're able to separate yourself, take a step back and separate yourself and see where you fit in that picture of, I guess, a cycle or a life, then how rational are your decisions taking that longer term perspective rather than being in the moment? It's very hard for human beings to do that. And if you think about just even in financial markets, how decisions are made, be it by big pensions or individuals, it's always the decisions that seem rational in the moment. But taking a step back, you would say, what were we thinking?
Well, and what's interesting about that is that you were surrounded by smart,
100%,
professional,
best in class,
experienced people that theoretically knew what they were doing.
Yes.
But then at some point they get emotionally committed to the decision, and they lose the ability to be rational when it comes time to make the hard decision.
Yes.
And you, maybe being younger and not as much experience, actually are at an advantage in that scenario because all you have to rely on is the practicality of the decision itself versus kind of, years and years and years of piled up experience that have told you to do it a certain way.
No, that's so true. And now that I'm the old guy, we got young people in our firm that look at the world a little bit differently. And so we just have to have the humility to go and look at them and say, hey, what are you thinking and why are you thinking this? And maybe there is something to that.
Yeah.
Man, we could spend forever here. A couple of things. How really smart people make dumb decisions. I think you just listed one of the ways we avoid it is humility. But let's push into this for a minute, because this is, whether you've got a small business, you gross $5-8 million and it's a team of 4 to 8 of you, or it's $1 billion corporation and you got so many layers. Do your best to give us a 1, 2, 3 formula to try to avoid. Obviously, we're all going to make mistakes. None of us can read the future. But try to help the listener. What's a 1, 2, 3 thing I can try to do to not get almost crowd thinking or making dumb decisions?
I always learn from what others are doing. So I think first thing you could do, so I'll illustrate with some examples.
Yeah, love it.
So if you think about AI today, that's a big theme. The way the market is pricing all of those companies engaging in AI is that they are all going to be, worth a ton more because of the opportunities it creates. But I think collectively, when you're looking at the whole industry, you have to know through the search engine era of 20 years ago that you're going to have 2 or 3 winners. Since all of those companies worth $1 trillion are kind of competing with each other, not all of them are going to win. And so your analysis on an individual company basis may say that, hey, all of them are going to do well. On a macro level, it's just not going to play out that way. So I think just keeping a big picture perspective on the industry that you are operating in and seeing how you're actually going to fit, I think is really important. The other thing I would say is the value proposition. I think sometimes just because it's your value proposition doesn't mean it's going to be effective in a market. So it's within the context of the whole macro, but if you're going to find your niche or your sleeve, you better be sure that it's really durable and not something that anyone else can encroach in.
And you kind of touch on, I think the AI is a perfect example of kind of a current, everybody's talking about it, everybody's in the game, everybody's sort of participating. And I think one of the things that is an effective tool is to say, if everybody's going right, maybe I need to look left and at least look to see what's going on over here. Can you speak to kind of that sort of crowd mentality?
Yeah, I think there are 2 sort of people, right? One of them are conditioned to just go with the herd. But there's another side, Scott, that's just as dangerous, which is I'm always going to be contrarian.
Correct.
I'm always going to try to be different.
Fair enough, yeah.
And I think they're both pretty dangerous. If you can take a step back and say, why is someone doing what they're doing and does it make sense? I think that will give you the clarity of whether you should be with the crowd or lean against it. But don't always be the person that's always leaning against the crowd. Crowd is also right a lot of times. So that's kind of really important nuance that I think even investors missed. I mean, so many famous investors, well-known groups have done well because they leaned against the crowd, and it's probably just a matter of the normal distribution. They just fell there by luck, and they continued to be contrarian, and then they just fell by the wayside because they could never change their mind.
And I think so much of that gets us back to, I think, Dhruv, your comment gets us back to ego, right? If I'm too egocentric, I guess I could follow the crowd, or I'm going to be so egocentric, I'm going to go opposite the crowd because I'm going to be smarter. I'm going to go left just because everyone's going right. I love your comment. You keep asking why. I want to drill in there for a quick second. You're in a little bit of a funk. You've got a decision-making process. What are some of the steps you have used in your journey and or your life to step out and get some oxygen in your thinking, so to speak?
I think when I don't have a great conclusion or support for my decisions, I know if I'm making a decision, I'm going to be forcing it. And keep in mind, 80% of the time, you probably don't need to do anything. So just walking away and stepping away, I think it's pretty easy. I mean, I've made a lot of mistakes in my career. And so if you can go back and live through those again and learn from them, I think it just helps you be so much better. I'm not one of those guys that would come in 25 years old and say, I got all the answers. I've made so many mistakes, but I'm also really good at learning from them. I'm sure I'm going to make some more. One of these is just, you don't just have to do something all the time. So it comes naturally sometimes.
Yeah, sometimes the best solution is to sit and do nothing and wait.
Right.
So hard, exactly.
And we're wired for activity. We're wired for like the next thing, and we got to make a decision, and we're in pain. A lot of times from an investment perspective, we are in pain, and we want to solve the pain immediately, which then requires a decision. And oftentimes it's the wrong decision because it's made out of emotion.
Yeah.
And leaders lead, right? We make decisions.
That's right.
And it's going to be really difficult.
Yeah.
What you just said is so wise. A decision may be to stay the course.
Right. I mean, if you don't make a decision, that's also a decision, right? In some ways.
100%.
Right.
That's opportunity cost.
Right.
People don't think through that part of the equation. Everything I choose to do, I'm choosing not to have time to do something else. So
Yeah.
it's good.
I know. I'm speaking, so it's good.
There's Dhruv. Start to walk us through how your experience has begun, or it did shape your investment philosophy. Because at the end of the day, you're trusted, you're the steward, you're the leader to help shape our investment philosophy here at True North.
And I would just add to that, you have such a diverse, varied background with all these different, organizations that you've worked for before you landed at True North. How does all of those different experiences influence and shape how you're thinking about sort of the macro view of the world today?
I think first of all, this is just a general comment. If you're an allocator today, I think you are just better if you've been in the industry and you've done it yourself.
Can you just define allocator really quickly for our audience?
Allocator being someone that's allocating a pool of assets, either for private clients or for an endowment. And so allocating it between equities or hedge funds, etc. So making the big decisions.
And one of the reasons allocator by definition, or allocating, that a lot of the performance over time is really the allocation decision, more than, if we're going to allocate to hedge funds, which hedge fund, it's, are we in hedge funds or not?
Correct. Yeah.
So it's the high level allocation decision.
There's the two great questions here. And that is, how does your diverse background talk us through that? And then how does that really then shape what you're responsible here in our investment philosophy?
So like I was saying, sorry, and I remembered now. So, and this is true really, I hate to be the center of attention. I think if you looked at an investment team, I speak to them as well. A lot of people on a team have diverse backgrounds. And so they've all, a good portion of them have spent their life and careers in actual investing. So when you've done that, you know what to look for in what makes a good investment. This is an interesting example. So when I was at Russell, I think I can take names, right? So I was at Russell, and great firm, and it was engaged in sort of manager due diligence at an institutional level. And when I was there, I interviewed some managers, and they had some answers to questions, which was, okay, I get it. When I moved to my next job, and that was in Wall Street, now I'm on the other side, and I'm feeding those groups ideas on how to invest.
You're feeding Russell ideas.
No, I'm feeding those same managers that I was doing at Russell.
Gotcha.
So what I heard from those managers during actual interaction from an investment perspective was so different from the answers that they were giving a large consultant. It kind of was a little bit eye-opening. And so ultimately, you have to be really aware and be able to look through just the marketing pitch and see what's the real answer there. So I think that part, if you have a team that's invested, has real investing experience, that helps you set the stage a little bit better.
Man, because you can parse the story, right? Because everybody's got a good story. I mean, nobody's going to market with a bad story.
Correct.
Everybody's got a good story, but then being able to peel it back and really understand, okay, what's underneath this story? Where do I need to focus? Where do I need to give time and energy to?
Well, that absolutely. Because you said what are some of your keys to determining if something is a good or bad investment?
Right. And so I mean, that's one part of it, right? So how do you analyze it, etc. And so going through that is important. I think the other thing too, Doug, second part of your question is also there are so many opportunities, out in the world from an investment perspective. So we don't have to try to be radical all the time to always, this goes towards trend or counter trend, to find something has to be unique all the time. Mm-hmm. If you've been in different industries, especially going through 2 market cycles of 2000 and 2008, you can always see when there are excesses in the market and when things are leading up to what would be a potentially bad outcome for investors and potentially for business owners. And then at that point in time, having seen that, it's pretty easy to see. It's just hard because of our human nature to ignore it. So I think that maybe the biggest learning of all is energy industry, financial industry. I was involved in both parts of the 2 big busts that we've seen. And so it's relatively easy to identify the excesses. So I would encourage anyone that's listening to it, take a step back. And if your gut is telling you something is wrong, it doesn't feel right, then ask why, take another step. I think you're probably going to be right.
So that's fantastic. So now let's talk about the current environment for a few minutes and just maybe, identify a couple things that make you nervous today in the current environment. And kind of I like the way you said it, Dhruv, where you're really, if you kind of look big picture, it's almost simple, right? I think the art is how do you make a good decision once you've sort of come to a thesis. Then how do you make the decision, boots on the ground, kind of that last mile decision in the portfolio. But let's pull up to sort of 40,000 feet. And so today, like if you're just sort of looking at the marketplace, looking at the universe, where do you see excesses? Where are the areas where you're sort of cautious? I don't want to feed you a particular asset class or part of the market, but give us your thinking there. And then maybe why is that obvious to you?
Right.
Where it may not be so obvious to the marketplace.
So if you look at financial research that most people do, right, and then you have statistics, et cetera, I think the one thing that they say is, hey, we've done a data set of X number of observations, and this is this is our T statistic, and this is how we know it's a good valuable signal. I think the problem is that in statistics, every single observation is supposed to be independent of each other. Markets are a link going back to hundreds of years. There's causation between what's happened before. So to some extent, statistics don't really work. It's just used. I don't know why. I think maybe it's probably misused more than it's used. So to get to where we are, if you go back to 1998 almost, and I think you can go before that, but that was a good point, is you had an Asian crisis at that point in time. And you had long-term capital management, which was a hedge fund that went under because of too much leverage. The Fed came in for the first time really and supported the financial system. That sort of led to, in some sense, you can say, encouraged the Y2K boom, the tech stock boom. So the reaction of the Fed from that. So that was one. It's like a big snowball rolling down a hill. It started there. Then we brought the rates back down lower. That started, the snowball became bigger, and that impacted housing. So before it's just tech stocks that impacted a small function of society, to then housing that impacts a much bigger part of society. And then rates were kept at 0% for a long period of time. And the snowballs keep rolling down the hill, gets getting bigger and bigger. And now it's impacting sovereigns and countries because they took on all that bad debt from 10, 15 years ago. So what scares me the most is that you have so many countries in the world with a debt profile that looks terrible. I don't know how many people are following what's happening in China right now, but China has been a problem for 10, 15 years. No one really knows when it happens. It could have happened years ago. But it seems like something is happening now. And so I think that what strikes some fear in me with the US, because, if something does happen in the US, people will say, I just don't understand why it didn't happen 10 years ago, right? You just don't know when it's going to happen. So if you look at Europe, the US, the debt profile is terrible. So when something is impacted at that level, then you have to worry about everything, because that snowballs become so much bigger. It's not just housing, it's just not tech stocks. What do you sidestep to provide some comfort and safety and security to people that depend on you? I think that's my biggest fear.
And so practically speaking, so then how do you translate that into kind of, the day-to-day work that we do here at True North?
I think a lot of that, the decision is so binary, because what you do in one instance, without getting too technical, it's a very binary type of a world right now. But what works well in one way works terribly the other way. So you can't really go and make a decision one way or the other, because we don't know. And so if you think about investing, what is it if not you're giving money to someone for a productive cause, and someone's generating returns for you by engaging in that productive activity? That's the very essence of investing.
It's a really good definition, by the way. Thank you. It's helpful.
I learned that IIT 25 years ago.
I love it. It's very helpful.
So I think that drives how we think about investing. So if we are investing in companies and investing with managers, we want to make sure they embody those characteristics in their portfolio.
Yep.
So we don't have to worry about the markets going up and down if I know that the companies I'm invested in have that balance sheet strength, are engaging in productive activity to generate returns, because they're going to make it through the cycle. And it's going to be painful in terms of market prices, but in terms of the business, I think it's going to be okay.
So say that, repeat that, because that's a really powerful statement, and we all need to hear it from time to time.
So markets will go up and down, right? So markets are nothing but what others think prices should be at. It really sometimes has no value as to what the real worth of a business is. Correct. So if you're investing in companies and businesses, buying them at a fair price, and managing your portfolio accordingly, then you can make it through a crisis, even though the price movement on that could be just as bad as some other securities. The difference is that when you come through to the other side, these companies are likely the survivors, and competition has gone away, because the ones that were marginal businesses probably didn't make it to the other side.
Yep.
So I think if I think about it, I don't have to protect assets for a particular decision, a particular point in time. If I look through a time series or over a period of time, I think I can diversify clients across that dimension as well. And so we're going to use all the tools we have, a point as well as a time frame definition of that. So if you go with that mindset with both stocks and bonds, or all the other things that we do, private investments, I think we have a pretty good solution set to protect assets. And there's some things we've done in terms of hedging, where if there is an event that we can't even conceive of, the unknown, if you will, I think we have some protection there. So ultimately, we don't know what we don't know. So we try to position assets in really good strategies with fundamental characteristics, and then go through that allocation process to make sure we have a real good diversified portfolio.
Can you give one example of, and I love the way you frame it, which is, I don't have to worry about markets going up and down as long as I'm sort of focused on, am I buying a good business with a good balance sheet, well run, good management, just all the fundamental things. I don't have to so much worry about the day-to-day volatility of the market, which is what most people worry about, right? But maybe give a recent example of how we've expressed that very idea. Maybe it's a private equity investment, maybe it's a public market investment, but just maybe one example of how we've expressed that idea, buying a good business, not needing to worry about where the market is today or tomorrow, just knowing that over a series of time periods that investment's going to do well because of what it is.
I think an easy example, because of the magnitude of performance, would probably be midstream, or what you know as MLPs. So basically, these are pipelines that transport oil and gas to basically from the production centers to the use centers. And so the idea there is that these companies have cleaned up the balance sheet around 2018, 2019 timeframe. They've gone through that cycle. The debt's being paid down. Think of it as a toll road in some sense, with some variability.
Yeah.
So you collecting the coupon when commodity flow goes through. So if you're getting a 9% type yield on those, and they're trading at
through the dividend,
yeah. And they're trading, the dividend distribution is 40% of income compared to historical 100% of dividends. So you have a big margin of protection. And the balance sheet, by the way, is down to it's been completely cleaned up compared to the rest of the market, where balance sheets are still levered to some extent. So that's one. When we wouldn't have invested, we weren't big buyers of that earlier on in the cycle. I would say after the balance sheets got completely cleaned up. So it won't be a great investment forever, but if we see any sort of turmoil in the markets, I think this sort of area of the portfolio is going to perform really well through distributions and returns. And
it tends to be a volatile asset class.
It tends to be a volatile asset class. It was down, 40-50% in 2020, to your point, Scott.
And chased a bunch of people out of it.
A bunch of people out of it. But the underlying business never really changed.
Yeah.
The balance sheet's quality clean.
What is your decision matrix for when to get out of an investment?
We try to, as much as when we enter a position, we write down what our expectations are, what our goals are for a certain investment. And we write it down so that if one of those conditions is violated, we know we have to go back and look at it. Ideally, you want to do it before performance get degraded. But there are 100 different reasons why you do it. I mean, it could be a group has taken in more assets than they promised that they would, but they can't execute on the strategy appropriately. The area of the market has become expensive when the risk reward has changed. There could be 100 different reasons, and we've exited positions. We exited our best performing position, I believe, in 2021 because they had taken too much in assets. And I think they really struggled last year, that group. I don't know if they've made it back or not, but that's not something, even if they were probably the best performer last year, we are not going to.
Well, and what's interesting about that, at the time you exited, their track record looked great.
It was fantastic.
And so, oftentimes the investor is saying, okay, I need to be in the stuff that's doing well right now.
Yes.
Or really what they're saying is I need to, what did well, we're sort of calendar year oriented. So what did well last year? That's where I need to deploy my capital. And oftentimes, you're at the top of the cycle, or it's oftentimes a worse time.
Correct. You're looking in the rear view mirror, not where you're going.
And really the question is, what struggled that, again, kind of back to this contrarian thinking in a balanced way, but what struggled and are people missing it? Have people just sort of moved on because it struggled for so long, and now all of a sudden there's an opportunity. And so you're having to deploy capital into a situation where it's not popular. It's not the thing that everybody's doing. It didn't have a great 12-month number. But invariably there's some upside, and we've done that kind of in and out over the years with MLPs.
Yeah, I feel like the market prices, the daily prices, are the biggest disservice to investors because it forces them to make wrong decisions.
Correct.
You're never going to buy a car if it's up 20% in price the next day.
Correct. But obviously we know why it's there, right? It's like a scoreboard of a game. It's real time. It's tangible. I can touch it. I can feel, I can know. One of the things I heard you say, and I want to repeat it and see if it's accurate or not. I kind of heard you say, as we think about decisions to exit, buy, sell, right, and to get out, you said hundreds of things, but my hunch is you and the team, there are 3, 4, 5 non-negotiables that you're, one, staying focused on and evaluating. And if one of those 3, 4, 5 fundamentals no longer match the reason why we got into it, we have to have the self-discipline to say, we're going to step away. It might continue to go crazy, positive, but we're comfortable with our decision matrix and having the discipline to walk away.
That's well said. I mean, it could be the key decision maker that left, too much in assets for the firm, or just a few more things like that non-negotiable. We walk away.
And that means paying attention. That means having enough team, enough staff, and not to your, I love your analogy, an investment that we might be in, taking on too much. we can't take on too much because we got to make sure we know what we are managing,
Right.
so we can give it the time and attention we need.
Right.
Yep. I'm a business owner. What should I be focused from your perspective? You have such a broad, diverse, big businesses, small businesses. I own a $15 to $40 million business. What should I be focused on?
I think focus on taking care of your customers and your people. I think having a good, there are very few differentiators, and every business is different, but at the core of it, I feel like the customer experience that consumers across the country are facing has declined significantly. And so if you are a face-to-face type business, I think that's going to be so valuable right now, because that's just missing in this environment today. I think if you are a business with supply chains, you have to be really careful about how your supply chain is structured, because you've probably experienced this in the last 2 years anyway, so it's nothing new I'm saying, but there is a lot of reshoring going back to the US, and to the extent you can get better prices or reasonably attractive prices you can live with, I think that's so valuable, because I think the geopolitical issues are going to impact the supply chains even more. In some ways, the world is getting more bifurcated. It's sort of the Russia, China, North Korean axis, and sort of the rest of the world.
You said customer experience and then taking care of your people.
Yeah, taking care of the people at your company, because they are the ones who are making it happen for the customer. And if they feel ignored, then I think you won't get that feeling that a customer gets when they come to your door. A lot of that's happening right now is because of COVID. I think the turnover has been pretty high. People are doing jobs because they have to, but not because they feel a real reason to come to work.
Yep.
So I think if someone can feel like they belong, I think it's going to show up in your numbers. It takes a while. You can't quantify it and,
immediately.
Yeah, immediately.
Exactly.
But it works.
Yeah, I mean, I think that's super important.
Yeah.
At True North, that's one of our big areas of focus is taking care of our people, nurturing and growing a culture of respect and appreciation. And, we have a core value of teamship, which just is short for teams win championships. And, our industry is very siloed and kind of individual producers or producer teams or whatever. And, we're just kind of one big team. Right now we have an office in Dallas and Fort Worth, but, there's no Fort Worth P&L and Dallas P&L. It's like, no, it's like we're one company, we're working together. And what that does is it allows us to leverage the unique, gifts and technical expertise of the team for the greater good when we serve the client. So it all works together, but it's super important.
Yeah, and I'll just cut you off there for a second, because I would say I've been in so many different companies, small and big. I'd say in my 8 years at True North, I've not heard a single raised voice. I say this to people all the time when they come and interview. And it's not because I wasn't there. I know it probably didn't happen at all. It's just very different.
Yep. It's interesting. And for listeners, viewers, I love sports. I think all three of us do. And I feel like every time before a huge championship, whether it's the Super Bowl or the US Open that's happening right now in tennis, some coach is looking at the team or the coach of the tennis player and saying, Scott, focus on the fundamentals. Focus what got you here. Don't overcomplicate it.
Right.
You're a listener, you're a business owner, and what's the first thing Drew said? Make sure your customers and your team members are happy.
Pretty simple.
If you sell irrigation equipment, if you manufacture massive HVAC systems, if you have a restaurant, are your customers happy? And I think so many businesses, we get removed. And almost going all the way back, Drew, to how do smart people get in a room and make bad decisions, which we will always do at some point. The best of life is trying to minimize that, right? But think about what is best for the customer, what is best for the team.
Right.
So what have we not asked you that you want to communicate to someone? What's left unsaid from your perspective, Dhruv?
I feel like I've spoken enough, but I will say anyone with assets today, be it through a business or through the investment portfolios, I think you need to be vigilant and just be careful. So if something does happen in the markets, it shouldn't surprise you. I feel like the environment's going to be pretty challenging the next 10, 15 years. I think just being a realist, not an optimist or a pessimist. Now, look, nothing may happen because, the human drive is for progress to make things better.
Yep.
But I think we are in a pretty problematic point in our history as a country. So just be vigilant and do the best you can do to protect yourself.
I love it. I want to go back to one quick topic real quick, and then I want Scott, you to have one more question if you want for him. Quickly, what's an absolute win from AI, and what is a big fear of AI?
I think the big win for AI would be, for humankind, it would be what was envisioned in the 1960s, where AI could go and improve everyone's lives, where it would maybe your personal assistant, it may enhance productivity. It can do so many things where actually human beings can go and live the way they were supposed to. I think we've ignored family, ignored some things because life has just become harder. I think it has the potential to change that. So it's very broad, but I think it can do that. The fear, I think, is with the technology like that, I don't care. I don't worry that much about AI. If people are smart, I think there's a way to supplant, it's going to take over mankind. It's more short term, which is, I think something like ChatGPT, which is a large language model, I think it's trained on certain data. So you're going to see a lot of misfires in the next few years because the data training is just going to be messy. Yep. I think how it's been implemented so far.
So well said, misfires.
I don't have any more questions. I just want to say thank you for your time. And Dhruv, we work together all day, every day, but it's not often that we get to sit down for an hour and just chat.
You're paying for my time, right?
Well said.
That's always that's humility. Yes. Always remembering.
But I
just,
I love the fact that we've had an opportunity to sit and chat for an hour and just kind of share, how you think about things and how, how you think about stewarding all the families and relationships that we touch at True North. So thank you.
No, thanks. It's just, I mean, with humility, we are not doctors or anything or saving lives, but it is really important for people. So
absolutely.
I think finances, money is pretty essential.
Yeah.
We think it can buy things it can't buy, but it is pretty essential. You watching, listening, enjoying this, thank you for your time. Dhruv, your humility, your wisdom, your humor, we've really enjoyed. Thanks for joining us on Decision Points.